All right, so why don't we get started? So welcome to the today's webinar. The topic of today's webinar is sales compensation. The main focus is on revenue recognition, commission capitalization, the accruals, and other operational tasks that we perform with respect to sales compensation. We have a series of webinars that we are going to run through. This is the first of the three webinars. There are two other webinars coming, one in May and one in June. We'll talk about that on a subsequent at the end of the webinar. So let me just go through the quick round of introduction. We have a great panel to talk through on today's webinar. My name is Abhijit Sant. I'm a Senior Vice President working for SpectrumTek. I joined Spectrum a year back, or a little bit more than a year back, leading their SAP Commissions practice. Before that, I was working for Calidus and SAP for more than 20 years, leading the North America implementations. Over the last 20 plus years, I have done 200 plus implementations, whether it's a small customer, small size, medium size, large size, global implementations, or take any different verticals, whether it's high tech, banking, insurance, life sciences, all the different verticals. I have done all those implementations out. I left SAP and joined joined Spectrum primarily because in Calidus times, majority of the implementations were done by Calidus and SAP. In SAP, it's slightly different. Majority are done by the partners, and that's the reason I decided to leave SAP and join Spectrum to lead their commissions practice. I am based in San Francisco Bay Area, and I look forward to sharing more details about this webinar and other things exciting things we are doing. I want to now pass it on to Kevin.
Hey, Abhijit, I think I was just starting middle school when you got into the SPM practice. So it's great to have your experience here. It's great to be with you. I'm really excited about our webinar series that we're doing together, SAP and Spectrum, just because of how applicable like all these sessions, all these topics that we're doing, especially the one today, right? So not only have we all individually been impacted by the pandemic, but our businesses have been affected as well. And so I think, some of the businesses that we've been engaged with are using this as a great opportunity to really prepare for the road ahead. So I think this series is really going to help jumpstart them on that path. So just a quick intro about me. I came to SAP through the Calidus acquisition, recently moved to our go-to-market team here within the SuccessFactors organization. And I spent a majority of my time in pre-sales, just really digging into the needs of our customers, digging into the requirements when it comes to sales performance management, or SPM for short. So today we're really fortunate to be joined by a great customer of yours and ours, and that's Genesys. They're a global provider of contact center solutions and a Gartner Magic Quadrant leader. In 2017, Genesys actually switched to SAP Commissions from the previous provider for many of the reasons we're actually going to cover today, or we're going to touch on in some way. And they wanted a better way to manage their global requirements. They're looking to maintain compliance and then also improve sales performance, of course. And so I'm really looking forward to hearing from Carissa and Tom on how all three of our businesses were able to come together and tackle some of their challenges with respect to ASC 606 and accruals. So Carissa, would you mind giving us just a brief intro?
Thank you, Kevin. So I am Carissa Graves, Director of Global Commissions for Genesys. I am a former CPA, so currently inactive, or recovering as we like to call it. I've been in the commissions world for the last 11 years and have been managing the global commission team at Genesys for the last 2.5 years. I was new to SAP and the Calidus solution at that time, but I've been working closely with our managed services team at SAP and more recently with Abhijit at Spectrum to roll out better accrual and accounting initiatives here at Genesys. So I'll turn it over to Tom so he can share his story and our process.
You're on mute, Tom.
Tom, you're on mute.
I've been with RGP for 17 years. We're a consulting company that does project management, change management, RevRec, lease accounting, transactional services like IPOs, bankruptcies, things like that. I came to Genesis working with them in the latter part of 2018, and my goal that was given to me was very simple: get us from 605 to 606 as quickly and as easily as possible, and been there ever since. So it's been quite a journey that I'll talk about a little later. But Carissa's in Nashville, I'm in Kansas City. This is just the way you roll in the world post-pandemic.
Great. I'm really looking forward to hearing all about that, how you got them on that journey here in just a few moments. So just to do a quick level set on where we're going to spend our time in the next few minutes or in this hour, we're going to dive straight into what Tom was talking about with respect to RevRec and amortization. And then we're going to spend a little bit of time moving into accruals. We'll talk a little bit around operational efficiency, and then we'll save some time for Q&A. So if you do have any questions, you'll see the little Q&A icon there in Zoom. I think we're all pretty well versed in Zoom by now. But if you just want to drop a question in, the panelists will review it, and we'll try to hit it at the end. If we don't get time, we'll make sure we follow up. So the first topic, again, we're going to talk about, we're going to jump into is all around ASC 606, the move from 605. A few years ago when ASC 606 first hit our industry, I remember Calidus went out and acquired a purpose-built solution. But we later determined that there are several other ways of solving for it. But before we go and get into that, Abhijit, can you just give us kind of a brief overview of how we got to ASC 606 so we can kind of do a level set with the audience?
Absolutely. So just from the bandwidth perspective, I have turned off my camera just so that my audio is okay to hear. So as we all know, over a couple of years, we started with the 605, then we moved on to 606. So what exactly is 605? And so it's many times people interchangeably use these terms, and in this process of the journey that we were going through, I learned a lot. So just a few things to recap, and this may or may not be encompassing every single scenario. So I want to be mindful of that, but I want to just quickly. So when we started with ASC 605, what companies used to do is that they either used to capitalize the sales commissions or expense the sales commission. So there was not a uniform way of doing the commission capitalization or expensing. The other thing that we used to see in ASC 605 is the sell through. When the companies used to sell to the end user through a reseller, they were not able to recognize that revenue or the commissions until the actual end user purchase is happening, and primarily because the reseller was giving some discount, the concessions, sometimes there were returns and so on. So the companies were not able to accurately project the commissions and the revenue coming out through the reseller channel. The other thing that we used to see is that companies were splitting that revenue into two primary buckets, the software and support. But there was nothing more into it in terms of how you are selling it out, even if it's a software sell. So there were not major options available over there. So as ASC 606 was getting rolled out, people understand the nuances, the differences, and to get it better, ASC 606 was brought in. And here are the primary changes from previously we were able to capitalize or expense it, but now primarily all sales commissions is getting capitalized. Now, from the sell-through perspective, you don't really have to wait until the end of the sale where the reseller is actually selling it to the end user. You can actually go and estimate, recognize the revenue as soon as you have given it to the reseller to do the selling it out. And finally, from the 606 perspective, we have much more broader buckets, more options available in terms of bucketing the revenue chunks into smaller obligations, smaller chunks, instead of just two big buckets, software and support. So in nutshell, as we moved from ASC 605 to 606, from the revenue perspective, we were able to defer the deferred revenue on the balance sheet started to go down. The revenues obviously was going up. On the commission side, the prepaid commissions increased and expenses was going down because now we were capitalizing the commissions, not expensing them out. So those are the fundamental differences that we see it from ASC 605 and 606 perspective. So as we go, as we started looking through from the solution perspective, I was working with Tom, and Tom can walk through his journey or Genesis journey from 605 to 606.
Thanks. Part of my journey was flying from Kansas City to Indianapolis every week for the first 2 years of this engagement. But it really was getting in, looking at what the company was doing from a 605 perspective. That was kind of the first thing. And it was what I would like to call a randomly manual process. There were 30 different countries doing whatever they wanted to do. It was very inconsistent. It was done on a contract by contract basis. It was not done across all the countries. It was done inconsistently. It was done different. Sometimes they would capitalize 100%. Sometimes they would capitalize less than 100%. The amortization lives were all different. And again, it was more tied to major contracts only. So one of the things that the management at Genesis basically wanted was a more consistent and timely approach. So what we did, kind of the first thing I did, and again, I started working on this in Q4 of 18, and our goal was to go live beginning of January 2019. Well, when we started working on this, we determined that a lot of our assets were going to have or had 5-year lives. So if we're not doing this on a project by project basis, but we're doing it on more of a broad-based portfolio approach, we noted that a lot of those assets had greater than 5-year lives. So essentially, we had to reconstruct 606 commission asset capitalization all the way back to 2014, because as of 12/31/18 or 1/1/19, when we went, was our day one, we had assets that went all the way back to 14 and 15. So there was a lot of forensic accounting involved in going back and kind of basically reconstructing what those assets look like. And to add a little bit more to the complexity, as Kevin said earlier, the company did not start Calidus until late 16 and fully implement it until 2017. So we were going back into, it wasn't even legacy systems, it was more legacy spreadsheets and building it that way. So essentially from that point, we started putting together our 606 portfolio on a manual basis. One thing I can't emphasize enough is one of the first things we did was we determined a very strong and consistent commission accounting policy that specifically addressed how we got to certain amortization periods, capitalization amounts for each one of our products. And we felt that was very key. Genesis has about 900 sales reps. And within Calidus, the orders report in Calidus, we have between 500, 600, 700,000 individual commission line items at a contract or opportunity level each year. So when we saw that, we said, well, we can't have, we can't have 2 million assets in Excel. So we need to think smarter. So at that point in time, we concluded upon that we need to utilize the portfolio approach, and we did this, and basically at our day one, which was January 2019, we had about 3,000 assets that had been generated from 2014 to 2018. And we were tracking those in Excel, both in USD and local currency. Then we started talking, gosh, we've got to, we go ahead, Abhijit. Next slide. We started talking and said, you know, we've really got to, this is not sustainable. You know, a 3,000 line spreadsheet is not a sustainable approach. So at that point in time, we, you know, maybe it was middle 2019 to the early part of 2020, we were up and running. We were utilizing the spreadsheets. We were adding 100 or so assets every month. And what also was interesting is during that time, we were required under certain debt covenants to do both 605 and 606 accounting. So we continued with the 605 decentralized approach. And then I came in and did kind of over the top entries for 606. By the end of 2019, we had began working with SAP to implement a tool that they had called RevSim, which we felt was a very good integrated solution. However, just about the time we were getting ready to move toward it, in March of 2020, SAP made the decision to no longer support this solution. So we had to find an alternative. Our SAP sales rep gave us the name of Spectrum and the folks there, and we started talking to them and really developed a solution. It was a generic solution, but it was also customized through various tables. We could set our amortization lives for whatever we wanted, depending upon the product. You know, put it to whatever cost center, record it on whatever legal entity. You know, it was very flexible as far as that's concerned, and we were able to really turn it into our tool. We began developing and implementing this in Q3 of 2020. The first step was to take those 3,000 assets that we had in Excel and load them into the system, and then start utilizing Calidus, where the system goes in, looks at all of that detail in Calidus, and is able to sum it up by project, by country, and on a monthly basis, and capitalize it based off of that. In addition, we have not all of our commissions are in Calidus. Maybe 10% are manual and outside of Calidus, and as a result, we have what we call a manual commissions factor that we input into Spectrum, that Carissa inputs into Spectrum, that is prepared on a quarterly/regional basis, and it's usually around 10%, but that allows us to capture all of the indirect costs as well. Ultimately, we implemented in September of 2020. Also around that time, our debt was refinanced, so we were no longer required to do 605 accounting under the debt covenants. And the interesting thing is we utilized this change in accounting and the Spectrum solution as an opportunity to do a couple of things. One, centralize 606 commission accounting. And Carissa's been key at doing that. And in fact, her team does all of the journal entries around the world, the capitalization, the amortization, the commission expense. She does all of that on a monthly basis. The only thing that the local sites do is that they basically record the payroll, and that's it. So one, it allowed us to centralize it. And then two, it really allowed us, now that we've got a very consistent, streamlined process, it allowed us to accelerate our closing of commissions from about 10 days before to the 3 to 4 day range. The Spectrum tool also allows us, ease in supporting budget and management reporting through waterfalls. They track, again, 5,000 to 6,000 assets now, because we've went up from about 3,000 to 6,000. And we track it in local currency as well as USD. So bottom line, we have been very, very pleased with our decision to go with Spectrum. And they've been very responsive to any questions we have, which are a lot. So.
Great. Thank you, Tom. And it has been great working with you and your team. So what I wanted to just quickly give is an overview of what Spectrum solution is. As Tom mentioned, he started the journey with the RevSim tool, which was the SAP Commissions add-on tool for the commission capitalization. But what SAP realized fairly quickly was that many of these functionalities that are there in this RevSim tool are already incorporated in the core SAP Commissions platform. So having the add-on tool is great from the selling perspective and so on, but really you didn't need it out. So what is the great benefit for the customers? Because now that you don't have to purchase additional license, you no longer have to have that recurring cost in terms of getting this commission accounting solution an annual license year over year. So that's a great benefit from the customer perspective. What we have seen is that the SAP Commissions tool, and I will go a little bit more detail in the subsequent slide, is that it's easy to configure from the commission capitalization perspective. The tool is takes into account the compliant configuration that are done in SAP Commissions. It takes into account your requirement with respect to how you want to capitalize the commissions, amortize it, whether it's a contract term, 3 years, 5 years, whatever the contract term is there, and other criterias that you may have with respect to amortizing the commissions and putting it in different buckets out. So we have an area within SAP Commission that allows you to set those parameters based on your specific configuration, specific your requirement, how the company does it, and that can be tweaked based on way you want it. It is initiated by the compensation administrator or the commission accounting team, whichever one wants to own this amortization or the RevRec process. It's easy to you just drop a trigger if you initiate it, and it generates a report, it generates a file, whichever way you want it. We can also go a step further, and if you want, we can actually integrate with your ERP tool or any tool that you want us to send this amortized report that shows month by month, quarter by quarter spread of the commissions. So it's easy to configure. So we just work with you, understand what are the parameters you have it, and configure the applications out. So just to give a little bit of a visual process in terms of how this process works, right? So if you look at this main box over here, this is the SAP Commissions applications. You get your organizational data from your HR system. You configure your comp plan data. You get the contract, the transactions, whether it's a bookings data, whether it's a revenue data, whichever one is your source, you get it over here. and that all gets loaded and put into SAP Commissions. Uh, at the end, you're running your calculation process daily, weekly, monthly, whichever frequency you want to run it. You can run the calculations out, and that this becomes the input for the commission capitalization process. So what we have within SAP Commissions is an area where you can add your own tables, add your own parameters that can be leveraged from for different areas of the processing. So what Spectrum is doing is that leveraging this category classifier process area keeps all these parameters that you have it, whether it's a contract length term, what are the different buckets you want to put it in, how you want to amortize it, whether you want to spread it evenly, whether you want to spread it differently, whatever is your criteria, right? Those are all mapped and kept it into the category classifier table. Um, at the end, when you're ready to run the capitalization process, amortization process, you just initiate that process. You can also automate and say, anytime I run calculations, I want that amortization process to run as the last step, so that that information is always available. So, but typically what you would do is that you would run it once you have run the calculations, once you're comfortable with the calculation results, then you run your capitalization process. So and at the end of this process, we can what we generate is either an extra in a file that says, here are your contracts that you either you want to amortize over the contract length term, or sometimes you want to amortize right away. Whichever way it is, that file gets generated out. We can also put that into a report if that's what you prefer it out. Or we can also send it to the accounting tool, whether it's a NetSuite, whether it's a SAP, whichever tool you have it from the accounting perspective, we can do a direct integration to them and create that integration. So the process gets much streamlined. You have one tool to manage, one tool to maintain everything in, and just as the calculations are done, your capitalization process kind of bolts on to the same application and generates the necessary outbound data out. Uh, so that's fundamentally what we do it from the commission capitalization process. Kevin?
Awesome. Well, while you catch your breath, Abhijit, just a quick reminder, if you do have any questions, if you want to throw those in the Q&A, that'd be great. We've got a couple already, so just keep them coming. The next topic we're going to touch on is accruals. And I really feel like this topic comes up in just about every engagement we have when it comes to SPM, since I've first joined Calidus, right? It's an important topic. Variable compensation is the largest expense for sales, which is why it's really critical for companies to have a process to track and manage accruals. And the more you can automate it, you get those errors out, right? You get the accuracy improved. And so, I think we're going to spend the next few minutes just talking around, getting a foundation of, what's the purpose of accruals? What why is it important to a business? And just how it's impacted by sales incentives, or why that's important to SPM in general. So Abhijit, you mind giving us just a little bit of an overview?
Absolutely. So when we started working with our customers, one of the common requirement that we used to get, or we still get, is accruals, right? As we are paying commissions and so on, from the finance perspective, they want to know what is the commissions, what are the expenses they have to plan for, they have to pay it out. So getting insights into that process, or that potential commission, is a very critical process. So the accruals allows the commissions process to give initial information to the finance team, saying that here is the potential commission that we're going to pay in a few weeks, months, year. So that information gets generated out of the commission system within few days of the closing of the month. And sometimes companies start a little bit earlier to get that information out. So at the end of the day, we are sending this information to the finance teams so that they can put what is coming out from the short-term credit perspective to customers and upcoming liabilities owed to the lenders. Accruals and deferrals are the basis of, as you can understand, the accrual method of accounting. So let's understand. So as we understand the accrual in general, let's understand how Genesis is doing their accrual process. So I'll hand it over to Carissa to talk through it.
Thanks, Abhijit. So Abhijit has talked through the Spectrum solution that we've implemented here at Genesis. Tom took you through our very long journey, right, to get from 605 to 606. And now my team, the Global Commission team here at Genesis, is tasked with actually executing, right, on our commission accruals and commission payments on a monthly basis. So I just wanted to share what the accrual process is like at Genesis today and how it's evolved over time as we've moved from 605 to 606 and as we've implemented the amortization reporting with Spectrum in our Calidus application. So as Tom mentioned, we are a global company. We have 4 different regions that we have input in Calidus as separate and distinct business units. We do calculate commissions on a monthly basis in arrears, and our commission accruals are due on business day 3 each month for context. So as Tom mentioned beforehand, before we moved from 605 to 606, each region was essentially functioning independently. So even within the global commission team, in terms of the calculations and the accrual inputs that we had, it was very disjointed and very manual. So as often happens when you have multiple groups working on the same project, you get different treatments, right, of the similar commission items, et cetera. So we've really worked over the last couple of years to try to standardize everything that we do from both a calculation perspective and an accrual perspective. There were a lot of estimates and a lot of manual tracking beforehand. And so with the Spectrum solution that we've implemented, we've been able to eliminate a lot of that, right, and make it much more systematic. So just to take you very high level through what our month-end close process looks like, we utilize preliminary transaction data on the first business day of each month to kick off our accrual process. Our finance team actually has until end of business day 3 to finalize the data that we use for commissions. So we know going into the accrual process that we have truly preliminary data. So we do scrub that and load it into Calidus. We run our comp and pay pipelines like we do during payment processing. And then we take the existing Calidus reports that we have from a payroll perspective and feed those into accrual schedules that we maintain in Excel. And so, as a lot of you know, right, your cash commissions and what you're actually capitalizing or expensing may not be the same, right? So from an accrual perspective, I have to capture every dollar that we're going to pay out to a sales rep, whether that gets capitalized or expensed on the financial statements. So because our cash payments don't equal, what we're eventually going to capitalize, we do have some manual factors, right, in that Excel accrual schedules. So we have a buffer amount that we factor in because we know we have preliminary data. We have the manual rate factor for the commissions that we calculate outside of Calidus that Tom talked about. And then we also have a threshold that we've implemented at Genesis for what we capitalize. So if we don't have, an aggregate of $1,000 for a specific product in a specific cost center every month, we just immediately expense those commissions. So that's another difference between what may show in our amortization or commission asset ledger and what I actually have to pay to the sales reps. So again, we're able to run comp and pay, and then once we have our comp and pay pipeline results, we're able to kick off the Spectrum solution. And so we refer to that as our commission asset ledger. Again, it's integrated fully, with our comp and pay results. So I'm able to drop a trigger file, and we get a consolidated report that has all 4 regions included that very clearly outlines here are the commissions that need to be capitalized. So I'm performing a reasonableness check during the accrual process to make sure that what's reflected on our accrual schedule and what's in the asset ledger ties for the most part. It's reasonable. Again, we have these buffers in our manual schedule that we use, but I'm looking at it to make sure it's reasonable before we book our accrual. And then that asset ledger that we have within Calidus is our book of record going forward. So we use that to prepare our amortization entries, and we use that later in the month during our actual payment processing. We run this report again, right, for final results, so that we can see the true commission assets that we need to book. And we can also do our current and non-current classifications based on the calculations that we've built into the asset ledger. So that's a very brief overview of the accrual process, but I will say having this, global report that captures all of our commission assets has been a huge time savings. It also gives us, one source of truth, right? Instead of different accounting groups within the different regions trying to maintain an Excel spreadsheet of commission assets and amortization periods, et cetera. We have a very easy, straightforward way to report that globally. Also, as we go through the process of looking at our capitalization rates, our amortization lives, et cetera, which could change every year, it's a much simpler process to implement those changes with this systematic solution than having to do that manually in Excel spreadsheets. So I would say, the last year, we've really been able to streamline and standardize a global process as it relates to our commissions accounting.
That's great. I'm glad it was much streamlined now, and I'm glad that the Spectrum solution has helped the process with respect to getting the accruals done much faster and more accurately. So that I'm glad that it's working out well for Genesis. And it also talks, as Carissa mentioned, right? It talks very well about how the commission capitalization amortization process is an integral needed part of that overall accrual process or overall commission calculation process out over here. So that's great. Moving on from the accruals to the next topic, which is the operational efficiency and compliance, there are a couple of areas that we want to highlight in addition to the commission capitalization and accruals that customers bring it to our attention, and we want to just quickly talk through those out. These fundamentally make your operationally overall process much easier, smoother as we go along. Those areas that obviously one thing is the pay file generation, depending on the company, depending what you have it, you may want to generate one payroll file, you may want to generate different pay file by the countries, different payment schedules and everything out, automating that payroll process in terms of generating the files, going through the approval process, and then finally uploading it into the payroll system is a very critical part of the overall operational activities. The other thing that we keep talking about is the audit compliance. So what is important is that anything you make change within the commissions application needs to be tracked in terms of who made the change, what is the change, so that your auditors, if they want to come and look at any single change or what triggered that issue, they will be able to track it down, who made the change, what is it. So I think that auditing functionality within the commissions application helps you make sure that everything is compliant as you look at. The other thing that came in the last few years is the GDPR. It's ability to mask the personal data. Not every single person needs to have access to all the data set. Depending on your access level, you will be able to either hide some personal data that is available in the commissions, or mask the data out. So the functionality, the GDPR compliancy is a very critical aspect of the commissions application as the customers are using it or evaluating the new tools out. The other thing that helps a lot from the operational is the effective dating. Generally, almost all the tools that I worked with, has some kind of effective dating out, and that is a very very critical aspect, because without effective dating, you kind of have to wait for the timing, for the time to make the change. For example, if certain change is happening 1 month from now, you end up waiting for it, or if the change is happening for the prior months, it becomes harder to do it. So having effective dating is very very critical with the commissions application. Especially you want to make sure that the effective dating is pervasive across all the objects, and not limited to certain objects like people data, or the results data, and so on. Or even the compliant information out. So having that information, that effect rating at every single object, every single cell, is a very very critical feature, and helps operations very well. And finally, the last piece is the integrations out. Integration is kind of a necessary solution, or the feature of the commissions application. You want to make sure that your data is coming seamlessly from your source systems, whether it is SAP success factor, whether it is SAP ERP, or any other tools like Salesforce or anything. Now you should be able to seamlessly get those data into the commissions tool. At the same time, you should be able to get the payment and other accruals and other data out of the commission system out. So that end-to-end process, the integration is a very very critical aspect, or to make sure your end-to-end operations are running smoothly. So those are the kind of a few things that I wanted to highlight when I look at from the operational efficiency perspective, operational compliance perspective, what companies are looking at. Kevin, you have any comments, anything?
No, this is great. Yeah, I think from a compliance is such a big topic, right? You just went through it and covered a lot of ground in a short amount of time. But I think that's just one of the things you get with our system, is how we help maintain compliance. And it's so critical. We engage with companies all the time where audit compliance becomes a really big issue. There's a big price tag that comes along with that, right? So there's a lot of different reasons, but with a purpose-built solution like ours, I think we're highly focused on keeping customers compliant. So great overview. Thanks.
Great. So those are the three main areas that we wanted to focus on: the ASC 606, commission capitalization, the accruals, and the operational aspects of. So just to recap, what did we cover on today's webinar? We obviously talked in length the differences between ASC 605 and 606. What are the nuances, differences? We understood how Genesis has gone through their journey of transitioning from ASC 605 to 606, and we went into detail with respect to the Spectrum solution, in terms of how you can leverage Spectrum solution without having to purchase the add-on software licenses, add-on software to do the commission accounting piece. From the accrual perspective, we obviously went through, understood what the accrual means. We understood how that process works from the end-to-end perspective. When do you start? How long it takes generally to take? We went through the Genesis process in terms of going from end-to-end accrual process. So that was a great insight into understanding how different companies are doing their accrual process. And finally, we talked about the general operational task, operational compliance activities like the payroll processing, audit entries, the effective dating, and the overall integrations between the different platforms out. All these combined helps you from your commission process perspective to make sure it is streamlined, it is smooth, and it is efficient, and more importantly, it is accurate. So I think we wanted to make sure that those are the highlights that comes out of all from this webinar. So coming out of this webinar and talking about the subsequent webinar that are coming out in subsequently. So we have another webinar coming in May, in which we are focusing on how as we are coming out of the pandemic, the COVID situations, and sometimes we felt like we came out and then we end up going back in. So the environment around us keeps shifting, and as the environment is shifting, the selling process, the selling methodology kind of had to get adjusted also. And what that means is that you want to change your compensation plan to make sure it is in line with the rapidly changing environment. You want to be able to change the compliance easily, faster. What are other companies doing? So if you want to learn a little bit more about how different companies are evolving or adjusting their compensation plans as they're going through this pandemic, or even as the process environment keeps changing, please join us on our next webinar, which is on the 19th of May. It's at 2 p.m. Eastern time. And finally, we have a third webinar that is planned, and this is primarily focused on the lot of companies who are going through the growth, hyper growth. How we are going to talk about how the companies are looking at their compensation plan, how the compensation plans are helping them scale and help the growth of the companies out. So it's a great insight for the companies who are going through the growth cycle. No, or even that, even if you are not, if you have been here for a long time, but if you still want to get an insight into it, this is a great webinar to attend. Now that's going to be on the 16th of June. So come and join us for that webinar also. So that covers the today's webinar, and I'm going to hand it over to Kevin.
Great. So we got a couple questions. I've got one that I want to ask. It looks like we got another one here in the chat here in just a second. I'll try to get to that one too. The first one, we'll send this to you, Tom. Genesis is taking kind of more of a portfolio approach you mentioned. So really what determines whether an asset is included in that portfolio or kind of excluded?
Okay. At Genesis, we've got, we're a SaaS company. We've got 3 cloud products, 2 on-prem products, and 3 types of professional services. So we've got 8 different product combinations, and each of those may or may not have their own capitalization rules, amortization rules, so on and so forth. So we look at the monthly detail that's sitting in Calidus, and we look at it by those product combinations, as well as by legal entity. And then to what Chris had said earlier, if we look at, and the total commissions that we're going to capitalize is over $1,000, then we include it. So basically at the end of the day, you know, it's basically each month, each legal entity, each set of product combinations, if the total commissions that are going to be capitalized is greater than $1,000, it's included as a portfolio asset. If it doesn't meet all of those levels of rigor, then as Carissa said, it is expensed as incurred.
Awesome, very helpful. Another question here, Chris, can you just kind of walk us through or share any insight on how Genesis handles the reconciliation process with respect to accruals? So once the period's closed, what is that kind of reconciliation process like?
Yeah, so our reconciliation process has greatly improved over the last year also. So we're doing global reconciliations now instead of trying to do them at a regional level, since we now have this global book of record out of Calidus. The reconciliation process is much faster too, right? So we have one report that is our one source of information versus trying to aggregate various spreadsheets, who knows, right, which manual errors could exist in those. So we have, a very consolidated global report that we can use for all of our reconciliations at month end. So that process has been very streamlined and standardized as well.
Got it. Appreciate that. Hey, so I noticed in the bios that you're from south of Nashville, Tom's from Kansas City, I'm from South Carolina. So this question is, who has the best barbecue? And maybe that's better on a follow-up webinar that we can hold together. But I'll put my hat in for South Carolina.
This is not even a question.
I know Kansas City has competition. Great. Well, it's certainly a debate I think we could have. Appreciate you guys joining. There's one more question from the audience for Abhijit, and that was, how is the RevRec solution implemented? Is that like an add-on to your existing license? Can you just kind of walk through again, kind of what anyone that's watching today can how they can engage you and kind of what those next steps might be, Abhijit?
That's great. That's a great question. So thank you for asking that. First of all, you don't need additional license. So you already own the SAP Commissions license. The solution that Spectrum has kind of sits on top of SAP Commissions. So from the software perspective, you don't need additional license anywhere. What Spectrum works with you is to understand your requirement, and we configure our solution based on your requirement. So there is a little bit of a configuration process that we go through, but once that configuration is done, it's all for you to use it out. So and so there's no year-over-year cost, anything that you need to spend. It's just configuration, initial configuration, and then you're good to go. You can own it, and then you can start using it right away. It saves companies a lot of money with respect to the year-over-year annual license cost.
Great. If there are any other questions that come in, or if you want to just email us direct, please feel free to get in touch with us and we'll be sure to follow up. Abhijit, anything else before we wrap up today?
I want to first of all thank you all for joining the webinar. It's really appreciate you joining it and listening to the content. I want to thank Carissa and Tom for joining and sharing their experience with respect to SAP Commissions, with respect to the Spectrum solutions, and how they are went through their journey of commission capitalization, ASC 605 to 606 transitions, their accrual process. It was very, very insightful for me and for the audience. So thank you for sharing your experience and your process out. I also want to thank Kevin for moderating this webinar. Really appreciate you doing that. If you have any questions, feel free to reach out to me. My contact details are over here. At the end of the webinar, when I send you the recording, I will send you all the details out. But feel free to reach out to me or anyone else on this, Kevin or Genesis team, if you have any questions out. With that, I'm going to close the webinar.
Thank you.